Singapore's inflation put on the brakes in November, with prices rising slower for retail goods, foods, electricity, as well as gas. Core inflation, which excludes private transport and accommodation costs, dipped to 3.2% on year from 3.3% in October. Now, the biggest change was seen in private transport inflation, which fell to 4.2% on year from 11.7% in October. And that was driven by lower car prices as COE premiums for bigger vehicles plunged over 26% in November's first round of bidding. Only the services sector saw inflation edge up, and that's largely due to higher costs in outpatient, recreational and cultural services. One economist says price hikes are expected to continue into next year.
We think that there will be an uptick in early 2024 for inflation, given the hikes in GST, carbon taxes, and other administrative prices, including water and public transport fares. Same time, wage cost pressures amidst a tight labour market will limit the fall in inflation.
Even then, the Trade and Industry Ministry and the Monetary Authority of Singapore expect core inflation to moderate broadly over the course of 2024. They say the strong Sing dollar will temper imported cost pressures, while the increase in completed housing units will help bring down accommodation inflation. And with headline inflation in November easing to 3.6% on year, analysts expect the central bank to likely stand pat in next month's monetary policy decision.
MAS views current monetary policy settings as appropriate to guide core inflation down to near 2% by end 2024. We think that MAS will likely maintain its current appreciation stance in the first half of the year, given the economic recovery and still elevated core inflation. So we are projecting for MAS to ease only at the October 2024 meeting.